Welcome back to the channel. In today's video, we're going to be recapping today's trade that we took on Yes. It was a beautiful trade, as you guys can see right here. So, if you hit, at the very top was a 1 to 7. We took 2 piece before. On Yes, we went long today, and a lot of guys have been asking me, why did I take this trade? And not important why I didn't take this trade, why I was looking for the longs and decided not to short a pretty nice opportunity today, and what made me kind of stay biased towards the long, or at least be safe and not enter no shorts. It's going to be really interesting in this video. If you like to learn, if you like to trade live with me every single day, we took this trade live, of course, in front of hundreds of members in our Discord, alerted and everything like that. We also have a full core membership, so if you want to join our group, I will leave the link down below. Little behind the scenes, I just recorded this video and I went to check, and I did not hit record, so I'm double checking again. Record is on, so hopefully I don't fuck it up this time. So let's remove this drawing right here, and let's look at some of the price action, right? So this was the 9:30 open, where you have this orange candle. And what was my mindset going into it? Going into it, this was the previous day close. This price at 53.30. So you see price bottom on that previous day close and bounced, and then this was the high of the pre-market, as well as this being the news candle at 8:30. We had unemployment claims. It was a red folder news. So going into it, I was looking at previous day close bounce, which did play out. Then as price opens up, you kind of see it go sideways until the 10 a.m. macro. Now I had drawn my fib from the unemployment claim. So my Fibonacci retracement down to that low, which this case was here, right? So you see that at the halfway point of the range, that's where ES was struggling. ES was struggling at the halfway point of the range. Then we also look at NQ at the same time. Again, unemployment claim top to the bottom of the market bottom for the pre-market. And what are we seeing? We're seeing a little bit of divergence here. We're seeing ES struggling at the halfway point, while NQ pushed higher and got all the way to the golden pocket. We also had a 5-minute fair value gap here. If we go to the 5-minute on NQ, there you go. We had this 5-minute fair value gap here that you guys had rejected off of. And a lot of guys were taking a short position there. You're like, hey, Anthony, this is kind of one of your favorite setups, right? Or one of the setups you trade a ton of. Divergence between the 0.5, 0.618 golden pocket, 10 a.m. going to 10 a.m. reversal, going to a fair value gap. It seems like a solid setup. A lot of guys took the short, and the short did work out. The short did work out. It was about 40 points here almost on NQ, maybe a little bit smaller right here on ES was about 7 points. So it gave you a nice move, and a lot of guys caught them mid money. The reason why I didn't look into it is I wasn't really as excited about the short. The short didn't really interest me as much as a long, was because we had no velocity coming out of that open. Coming out of that open, if we look at both NQ and ES, on their way up, we made no fair value gaps. We didn't really invert any fair value gaps. We didn't have any big moves out of it. As you can see, the 9:30 candle was a pretty mediocre candle and just went sideways. So if I want to go short into an area, especially when it's supposed to be a volatile time like the New York Open, I want to see aggressive buying into my key area, and then I can take a short. If I don't have that aggressive buying, I will not have a smaller time frame confirmation. Like we will see the example of our trade. So it did not excite me as much. And just because I saw 2 big red candles, I didn't FOMO those red candles. I didn't, oh my God, we're breaking the lows. Boom, we're short now. Right? A lot of rookie traders will be like, oh, boom, big red. Let me short it now. A lot of times it's the opposite. You want a big red and a big green to take the opposite trade on. So 10 a.m. micro approaches, right? 10 a.m. to 10:15. Some decent selling into a bullish divergence. You see ES right here, takes out the low, while NQ right here holds the higher low. Again, now we're taking out all this liquidity that was built right here. This is the liquidity from the open, and we're bouncing on that sideways price action. You see we're trading inside a box. We took out a liquidity side and bounce back up. Same thing for NQ. Big selling to the higher low. We take out this liquidity right here on this 1 minute on 18,687, and then boom, we're on the way up. So now I get a big selling into a key level that I like, which in this case would be bullish divergence. We had the pre-market lows right here into a level that I like. Now what I'm looking for is a smaller time frame confirmation, right? You guys know usually I trade on the 5, even though I'm showing you the 1, but usually I'm trading on the 5. As you guys can see, it's even cleaner in here. This choppiness action and taking out the lows, right? And then quickly reverting up. Again, it kind of teaches you the liquidity class I did not too long ago on this, go to the Big Gains Club YouTube channel. Got Big Gains Club. Eric always pops up now. If you go to Big Gains Club YouTube channel, I just did a class on liquidity right here 7 days ago. Let's run it up to 1,000 views. I promise you guys it's going to help you understand these concepts a lot better. On the 1 minute I'm looking for, and in this case was an inverted fair value gap confirmation. So as soon as we inverted this 1 minute fair value gap, we took the long, we used the stop loss being that 1 minute inverted, with PTs being at the all-time highs area, and then the TR pocket for the runners, which was almost a 1 to 10, right? Like again, you're gonna take profits along the way. It's probably gonna be more around a 1 to 5, 1 to 6. But look at the risk, how small our risk is, right? We're risking about a 1.5. You can take these trades all day long if you're risking a 1.5, all day long. And it's all about it as a trader. Avoid drawdown areas, guys. And the reason I took ES over than Q because it was the weaker one, so theoretically should have given us the better move to the upside, right? Now, what's interesting about this fib? How important was this fib, right? This 0.5 that was the resistance on the fib. If you drag it out, turned into support, and again, golden pocket right here, which was the resistance for, and Q turned into a support. What you have to understand about the fibs, they can also, I don't really talk about this, but you could always, once you touch them, right? Let's say we had touched them here, these two levels. When we go back up the second time around, I don't have to worry about that fib being a resistance anymore. I don't have to worry about the area being really an issue anymore because it's already been touched. So it theoretically should be weaker the second time around and we should blow past it, which in this case, you can see we did, and we actually came back tested both of them in the smaller time frames and then shot back up. So could have been potentially an add-on entry there, right? Now, not only that, but also want to talk about the importance of drawing your fibs correctly. It's all about drawing your fibs correctly. Look at the way we use them, and it also kind of mapped out the top of this range. If we look at them, the TR pocket, and both in Q and ES, how we drew them was pretty much the top and almost the bottom. Look at this, back to the bottom, spot stop, back to the bottom, big green, and then, oh yeah, of course, market close. But very, very accurate to use when you're using them correctly. And that was my idea pretty much behind this trade. And I really wanted to focus on why I didn't take that first short, even though a lot of guys might have seen them like, hey, that theoretically looks like a good short. But even though it did kind of work out, it was fast. People got it, it wasn't the cleanest trade. I want you to think about that next time you're taking a trade. How's the price action looking at it? That's why I'm against really mechanical trading, because mechanical trading, you really would have to take that short, or you wouldn't see how to avoid it. But with experience, you can avoid a lesser trade and focus on the A plus setup. That's why I teach every single day in a group when I'm sitting there, showing is patience, and showing is just me waiting like a hunter, perfect for my prey. So if you enjoyed this video, guys, make sure you like, subscribe down below. We're pretty close to 10,000 followers. We're like 8,000 something, I think, 8,006. So get down there and hit the follow button. Peace.